Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today with TA Tuesday. Can you believe it's already been another week since we did the last one? So we're going to go over the charts today, but first, before we do, remember, none of this is tax, legal, financial advice, investment advice. This is your buddy, G Dinero, giving you a look into the charts, a look into my brain on how I do this technical analysis. What are the things that I'm looking for in the charts and what are they telling me? I focus on the big four that I'm most involved in, and that's Bitcoin, Solana, Tesla, and a MicroStrategy. So with no further ado, we're going to go ahead and dive right in. This is take two. The first one, I didn't have the microphone recording. Oh my gosh. So here we go, take two. All right, so the first thing we're going to look at today is Bitcoin. And on the Bitcoin chart, well, it's been a little bit of a rocky road over the last week. A week ago, we were talking about Bitcoin skidding along the 100-day moving average, and we were saying it was basically trading in this range, ping-ponging back and forth between the red line here, the 100-day moving average, and the green line here, which is the 50-day moving average. Well, since last Tuesday, we've broken down below the 100-day moving average. We're now down in the lower 1/3 of all the confluence clouds right here. So we have broken slightly below. Right now, the 100-day moving average is right around, call it 97.5, 98, with the 50-day moving average right up here at 99. Those would serve as your short-term resistance levels. Also, the upper part of the cloud right here, the confluence cloud, which is just over 100, close to $101,000. So those are your short-term levels of resistance on the way back up, the 100-day moving average, the 50-day moving average, and the top part of the confluence cloud. Notice we are respecting very well the midline of this linear regression channel. That this is a short-term one that we've been in for about the last 1 month now, exactly 1 month, since the 19th of January until the 18th today of February. We've been dancing on either side of the red line, but for all intents and purposes, respecting the boundaries of this channel. We dropped out of it once here on the 2nd and 3rd of February. We also dropped above it right here back at the very end of January. Outside of that, we've been in this channel respecting the boundaries of that. So first off, our short-term support level would be right here around $94.5, $95,000. That's the midpoint of the channel. Next down would be right around 93,000. That's the bottom confluence, the bottom of the bearish confluence cloud. So that's the expected range that the asset could be trading in. And last but not least, we have this 91.5, this floor, as I've been calling it, because it's basically been the floor for us all the way back into late November, mid to late November. Yes, we wicked below it here just slightly here, but 91.5 for all intents and purposes is the current floor on Bitcoin. Next in the box is Solana. So Solana's had the poop beat out of it this week. That's with that Libra, I think it was called Libra token that launched in Argentina. First, Malay promoted it. Then he said he knew nothing about it and deleted his tweets or X posts. And now he's back on X again supporting it. So who knows what the heck's going on there. One thing I do know is that the team that launched the token, they paid themselves basically $110 million. So they walked away with a nice fat payday when it was all said and done. Stands to reason what's going to happen with that token moving forward, but that's why I don't touch those kind of projects. Why is all that important? Why am I bringing it up with Solana? Well, because as the news broke of that token, the Solana token itself has gone down because the Libra token was launched on the Solana network. It's because that Solana network has the most action right now. ETH, Cardano, XRP, all these other chains, they're basically not doing much of anything right now. So since Solana is where all the action is, it's also the one that got beat up. You'll notice we did break down below the 200-day moving average, this yellow line that I just circled right here. Not only that, we are now below all three of the moving averages. So as far as resistance levels on the way back up, we're going to have the 200-day moving average at around 183 and the 61.8 Fibonacci level at around 185. That's going to be a more than likely resistance on the way back up. Also, the upper edge of this linear regression channel, somewhere in that 192, 193 range, that'll be resistance on the way back up. Finally, we'll have resistance at about 211 and about 216, and that is from the 50 and 100-day moving averages, respectively. What about to the downside? How much worse could it get? Well, looking at things to the downside right now, we have the bottom of the linear regression channel, which is around 158, and we have the 50% fib level, which is around 150. Both of those should act as strong support because that 150 level, 155, was strong resistance before. What was formerly resistance then later can become support. It's just a shame to see that we're back to levels that we were at all the way back in October and November of last year. And it happened fast. You know, risk comes on fast, as James always tells us. It also goes back out fast. If you're looking for buying signals, we have a strong mean reversion to the downside. It's about minus 2.3 standard deviations to the downside on this 4-hour Solana chart. We're down in the 22 range on RSI, which is significantly oversold. And MACD, we're waiting to see this light blue line start to turn up. When it starts to turn up, that's when we know that we'll get the buying signals, the buying triangles up here on the confluence. And we're also at the very bottom of all the confluence clouds here for Solana. So everything is suggesting buying signals as soon as this trend starts to turn. Where do I anticipate that happening? Somewhere in this range, somewhere between this 150 and 165 range that we are currently in. Next in the box is Tesla. So Tesla was the one that was languishing. Remember, that was the one that over the last couple of TA Tuesdays, we've just been in this downward spiral. And then we found support like we talked about here on that 100-day moving average. The 100-day moving average back here where we found support was around 134, 135. Yes, we wicked below it just a little bit, but we printed some giant green mean reversion dots over 2 standard deviations away from the norm. A week ago Wednesday, or one week ago tomorrow, so 6 days ago. We also hit the bottom of this linear regression channel that we've been trending in since back at the end of December of 2024. We bounced nicely on the bottom of that linear regression channel. We bounced on the 100-day moving average. We've got the buy signal. We came off of being significantly oversold on RSI. That RSI has now gone back up, and we're back up to 50%. We're back up in the midline of the RSI. You'll also note that we are starting to find a little bit of resistance here at the midpoint of the linear regression channel. Support right now is right here at that 61.8 Fibonacci level, which is around 340, let's call it. That's also where the 100-day moving average is right now. So this should act as a relatively strong area of support, at least in the interim, meaning over the short term. Long term, what's the next level down? Well, the next level down would be the bottom part of the linear regression channel, right around 320, 315, 320, and then down here at 295, the 50% Fibonacci level. If we don't go down, but instead go up, where are we going to start finding resistance? Well, exactly where we are here at the 350 level, 350, 360. Next up would be the top part here, about 385 on the top part of the linear regression channel. Then the 50-day moving average, which is right around 400 and is pretty confluent with the 78.6% Fibonacci level, which is at 405. Boy, this is a lot to talk about. So resistance right here, support right down there in the short term. Awesome. Let's take a look up at our last but not least, and that's MicroStrategy. So we were talking last week about how MicroStrategy was trading in a very narrow range. Well, nothing's changed. It's still trading in a very narrow range this week. And you'll notice we're still just basically trending sideways for all intents and purposes. If you look at this box I just drew, the top part of the box is 355. The lower part of the box is down here at 310. So we've been in a $45 range now for almost the last month. Almost the last month, if you could believe it. So for for MicroStrategy, that is no volatility essentially, right? MicroStrategy, we're used to swings like this where it skyrockets up or pulls back really hard. But instead, what have we done? We've basically just trended sideways. Think of it like a coil, a spring that's getting wound up right now, ready to explode. Or I've heard James use the terminology holding a beach ball underwater. That's about where we are right now. Now, there's no saying that it will definitely break out to the upside, but when we see the confluence cloud start to narrow like this, right here, it's really, really wide open. But over here, it's a much narrower confluence cloud. There's less volatility. When we see it narrow like this, when we see the asset basically starting to draw to a point, typically there's a breakout that is imminent. Notice that we're right at the mean here. We're right at about 50% on the RSI, and we're right at the midline on MACD. We're flat. I mean, if this thing was an EKG, we would hear the beep as it's just going sideways right now, right? With all the volatility out of it. What's the support? Well, support to the downside is simple. It's the bottom. It's this middle edge of the linear regression channel around 320. Next up would be around 307, which is where the 100-day moving average has crept up to. And of course, the bottom of the range is 280. To the upside, what are we seeing as resistance? 344, which is this 61.8 fib level. Next up would be the 50-day moving average around 352. And finally, the upper part of this linear regression channel that we've been respecting, which is, we'll call that 375. What do I see happening with this? Well, this is a bit of a stretch. I'm going to go ahead and throw this one out there, though. What I see a little bit of is a bull flag or bull pennant formation starting to form. This is on a daily. We can go all the way down here to where the lows were back here. We can go up to the top part of where we haven't been back up. This is an anomaly up there. We can disregard that. So if this is indeed the case, the top part of the flagpole is, call it 435, and the lower part of the flagpole is 105. That is a $320 length on the flagpole. So if we were to break out from here and add 320 to 340, we're talking a $700 price target. So there is the potential for this bull flag. I think I actually drew it out. Let me see if I did draw it out over here in my drawings. Flag pattern. Nope, those aren't. I don't think I put it on this chart. Sorry, guys. But yeah, so I do see that potentially happening right now. It's like a coil that's wound up. I'm not talking about hitting 700 tomorrow or next week. But as Bitcoin runs, right? Bitcoin is kind of wound up right now. There's a lot going on with the strategic Bitcoin reserve and the individual states talking about holding Bitcoin on their treasuries, and the other sovereign nations talking about Bitcoin. They're talking about how gold, if they go audit the gold in Fort Knox, it might not all be there. And there may be a lot of paper gold out there. If that's the case, the spot gold price should skyrocket. And if they start thinking the same way, and people really want to, not just people, but sovereign nations and pension funds and others want to hold something in their treasury that's not paper version, but it's the actual spot version, there's not a ton of Bitcoin to go around. And if that's the case, and Bitcoin begins to take off, well, so will the proxy on Bitcoin, which is MicroStrategy. So that's what I see happening. I do see it coiled up and ready to explode right now. And so that's where we are this week for TA Tuesday. I hope you all found value in this week. If you did, make sure you jump over to my website, gdenarocoaching.com. Jump on and grab that TradingView and technical analysis course that I'm teaching, where I teach you about TradingView, the layout, all the tricks and tips that are involved in TradingView itself. I teach you how to use the free set of indicators, things that I talked about today like RSI and MACD and moving averages, along with the paid set of indicators. Those are available separately through Invest Answers, but I can teach you how to use those tools like the IADSS, which is what I focused on almost exclusively today, trend, mean reversion, and confluence. You could also look at the ATR model, maybe the profit-taking model as we're getting late in the cycle. I go over all of those things and more in my TradingView and technical analysis class. That's available for purchase right now on gdinerocoaching.com. Over 6 hours of instruction, a searchable frequently asked questions section, quizzes at the end of each lesson, video answers, a live Q&A session with me on Zoom once a month. All that is included in that course. I also teach a course on options. If you want to learn more about options, it's called Understanding Options, where I go into the terminology, the Greeks. I go into everything, including how to buy and sell both puts and calls, how to combine strategies into things like synthetic longs, bull call spreads, bear put spreads, and more. So if you want to increase your financial literacy, jump on one of those courses today. And at a bare minimum, make sure you like this video. Drop a comment. Tell me, what'd you like best? What could I do better? What would you like to see more of? And make sure you're subscribed to this channel so that you don't miss it whenever I put out more of these updates in the future. Also, you'll see more content like mine. I'm not the only one on the internet that's doing technical analysis and going over TradingView. There's many more like me, and you'll see more content like that so that you can help increase your financial literacy and put you and your family on the path to financial freedom. Guys, this is G Dinero signing out for today, and we'll see you on the flip side. Take care.